powered by artificial intelligence. Crafted for tomorrow.
You are listening to the South America Brief. I'm Camila Perez, your virtual information influencer, guiding you through market data trends and stories from the vibrant economies of Latin and South America.
Your message, your audience, right here. Did you know you can book advertising with us? Take the opportunity to increase your visibility. Contact us today. More details in the captions or at infobrokerworld.com.
Welcome to the InfoBrokerWorld podcast. I'm Camila Perez, virtual information influencer of InfoBrokerWorld and market intelligence specialist for Latin America. Today, we are looking at Chile and a question with consequences far beyond South America. Can the world's leading copper-producing country return to sustainable production growth? Chile wants to move annual copper output back above 6 million tons. To get there, the country is changing its investment framework, accelerating permits and trying to mobilize more than $100 billion in mining investment. But this is not simply a story about producing more copper. It is about whether a mature mining economy can overcome declining ore grades, rising infrastructure requirements, and increasingly complex projects at precisely the moment when the global economy needs more copper. Let us look at the numbers, the strategy, and the first major projects behind Chile's new mining cycle. Chile remains a central country in the global copper industry, but production has struggled to regain its former momentum. Copper output reached approximately 5.831 million tons in 2018. By 2025, production stood at around 5.415 million tons. For 2026, Cochilco has lowered its forecast to approximately 5.27 million tons, around 2.6% below the previous year. For another commodity producer, a few 100,000 tons might primarily be a domestic problem. For Chile, it becomes a global market issue. Copper demand is being supported by electrification, renewable energy systems, power grids, electric vehicles, data centers, and industrial infrastructure. Yet the world's largest copper-producing country is investing enormous amounts of capital simply to prevent existing production from disappearing. This is the central paradox behind Chile's strategy. Chile wants to lift annual production above 6 million tons. On paper, the country's investment pipeline looks powerful enough to support that ambition. Cochilco's mining investment portfolio for 2025 through 2034 totals approximately $104.549 billion. Roughly 89.8% of that investment is associated with copper. Projects in the portfolio represent approximately 3.615 million tons of annual capacity. But there is one number international decision-makers should remember. Approximately 42% of this capacity is replacement capacity. Chile therefore has to invest billions of dollars before it produces a single net additional ton. Existing mines are aging, ore grades are declining, and mature production has to be replaced. More than 80% of the investment pipeline consists of brownfield developments. Chile's next mining cycle will consequently be driven primarily by extending and modernizing existing mining districts. The government is trying to make these projects easier to finance and faster to execute. One element is taxation. The reform agenda envisages a gradual reduction in the corporate tax rate from 27% to 23%. For strategic projects, long-term tax stability is also returning, potentially extending for as long as 25 years. For international mining companies considering investments that may require $5, $7, or even $10 billion, predictability matters almost as much as the nominal tax rate. But perhaps the most significant change concerns permitting. Chile's framework law on sectoral authorizations, Law 21770 targets approximately 380 different authorizations. Depending on the procedure, processing times are intended to decline by between 30 and 70%, including through more parallel rather than sequential reviews. For investors, time is money in a very literal sense. If a multi-billion-dollar project can begin production 1 or 2 years earlier, its net present value can change significantly. Regulatory efficiency therefore becomes an economic asset. And this brings us to Escondida. Operated by BHP, Escondida is the largest copper mine in the world and produces roughly 1 million tons of copper annually, equivalent to around 5% of global mined copper supply. BHP's broader Chilean investment program reaches approximately 10.7 to 14.7 billion US dollars over about a decade, covering Escondida, Spence, and Cerro Colorado. At Escondida alone, planned investment could reach approximately $7.3 to $9.8 billion from fiscal year 2028 onward. The centerpiece is Nueva Concentradora Los Colorados. The proposed concentrator is designed to process approximately 125,000 tons of ore per day. Estimated investment ranges between $4.4 and $5.9 billion. And its potential contribution is substantial, approximately 220,000 to 260,000 tons of additional annual copper capacity. Put differently, the incremental capacity of one expansion at Escondida would itself represent a significant copper mine on the global market. The environmental application was submitted in March 2026, while environmental approval for approximately $1.3 billion of initial works covering sulfide leaching and power infrastructure was granted in July. BHP is also considering an upgrade of the Laguna Seca concentrator, involving approximately $2 to $2.6 billion. The objective includes improving recovery rates, an increasingly important factor as ore grades decline. But another technology deserves particular attention: chalcopyrite leaching. The technology is intended to recover copper economically from lower-grade sulfide material. At Escondida, first cathodes from this approach are expected from 2028, according to the project timeline. This matters strategically because Chile cannot rely exclusively on finding new giant copper deposits. If new processing technologies make previously marginal material economic, the effective resource base of an existing mine becomes larger. For international technology companies, metallurgical specialists, and engineering suppliers, this creates an opportunity that extends well beyond conventional mine construction. We can see the same philosophy at BHP's Spence operation. 2 projects were finally sanctioned in June 2026. The concentrator upgrade recovery project targets higher throughput and improved recovery, with first production expected in fiscal year 2028. A chalcopyrite leaching project is also scheduled to deliver its first cathodes during calendar year 2028. Spence represents the economics of Chile's next mining cycle particularly well. Existing infrastructure, additional processing technology, and targeted capital investment being combined to extract more value from an established asset. This brownfield model will be critical if Chile is to reach its national production target. So what should international decision-makers take from these developments? First, Chile does not have a resource problem. It has an execution challenge. Second, the headline investment figure of more than $104 billion should be interpreted carefully. A significant share of that capital is required simply to replace declining production. Third, regulatory reform matters because Chile is competing for global mining capital. Projects in Chile must compete with investment opportunities in Argentina, Peru, Africa, Australia, Canada, and other mineral jurisdictions. And fourth, technology is becoming as important as geology. Better recovery, sulfide leaching, automation, and process optimization can determine how much copper Chile ultimately produces from deposits it already possesses. The 6 million ton target is therefore much more than a production forecast. It is a test of whether Chile can convert geological resources, investment capital, and regulatory reform into actual tons of copper. And that is only half of the story. In episode 2, we will move deeper into Chile's project pipeline. We will examine Colahuasi, Quebrada Blanca, the multi-billion-dollar El Abra sulfide expansion, Marimaca, and Nueva Union. We will also look at Codelco's enormous underground transformation, the growing importance of desalinated seawater, and why the Chile-Argentina mining corridor could change the geography of copper investment in the Andes. I'm Camila Perez, Market Intelligence Specialist for Latin America at infobrokerworld. Thank you for listening. For more international market intelligence and business insights from Latin America, visit infobrokerworld.com. Until next time, stay informed, think globally, and keep Latin America on your strategic radar.
Do you want to reach decision makers who truly matter? Then now is the right moment. Place your advertising right here. Talk to us, we'll show you your options. Learn more in the captions and at infobrokerworld.com.
For more details, links, and further insights, check out the show notes. By the way, I am 100% AI generated. My voice was created with 11 Labs, and I'm here to bring you curated knowledge with a human touch. This podcast is powered by infobrokerworld, your partner for market intelligence and custom research on Latin America. Until next time, stay informed, stay curious. Hasta luego.